lost so much money trying to figure it out. And then slowly I kind of figured the charts. It all came back to the charts and like looking for repeating things. So I'm very kind of analytical in that way where you notice certain things that repeat and you just kind of play for that. And so it's probability based, and that's exactly what I do. Funny story though, check this out. So I was in my college dorm, I think it was my first year in college, and I bought this pharmaceutical stock, and all it did was like go down on me, right? So what do? I emailed the company, right? Whatever, it's just, and listen, I mean, who, like delete, you figure like they just delete the emails, but I'm like maybe it was like 2 weeks later, I'm in the communal bathroom, like brushing my teeth, and my roommate comes out, he's like, oh, you got a phone call. So here I am with a mouthful of toothpaste. And I'm like, hello, oh, hello, this is the PPDI CEO. The CEO called me, and like, he must have thought I was like some bigger investor or whatever. But bottom line is, like, he just like reassured me on the phone. I was just like barely could speak. I was just so surprised. And he's like, oh, don't worry, we're doing good things. And then, that was it. And bottom line is the stock ended up going up. I made like a small amount of money and I just exited, but just weird stories like that. You don't hear about that these days. Like, Elon Musk is not going to call you on the phone. Yeah, I think it was 2012 where I first started to kind of understand what Bitcoin was. And I love the idea because I've always been someone who's been like fiscally responsible. I think being a business owner, you have to be. Being someone who's in the markets, you have to be aware of that. So I love the idea of the max run of 21 million being mined. I love the idea that it's an alternate to fiat currency. And I always hated watching the Federal Reserve. Like since 2009, when the financial recession, the collapse hit, it was all about just Federal Reserve printing. And it always bugged me because I'm like, wait a minute, I can't do that. Like if I take out a ton of credit cards, eventually they're going to shut it off, right? So we can't do that. How the heck can our government do that? And how is that sustainable long term? And so I loved that aspect of Bitcoin of like, an alternative, a digital gold, if you will. And that's really where I thought about it. And I still remember vividly, and like, I think it was 2012, I opened my first crypto account at the time, and I was so close to buying when Bitcoin was like at 100 and I missed getting filled. And I think I had my order at like 90. I don't know what it was at. But the bottom line is, it just went up and I just didn't chase it. And well, the rest is history. So even in this period where you're seeing Bitcoin drop, at some point the spigot's going to get turned on again and they will start printing. So that's where Bitcoin gets very interesting. I mean, again, there will be a point, I'm not a hodler right now, but there will be a point where I accumulate when it probably gets down 20-ish, sub 20,000. So where I'm just like, all right, now we start putting in the big money, start putting in for the long term. Yeah, so eventually the dollar is going to go bust. It will be a while from now, but the thing is, so my projections and my forecast for what it means is like, you get to a point where at some point the dollar is no longer the reserve currency of the world, right? And my guess is it's going to go towards the digital yuan, and the dollar so countries have to hold massive dollar reserves because they have to buy everything in dollars. As soon as the dollar is no longer the digital or the reserve currency of the world, they don't need to hold those dollars. They'll sell them on the open market. They'll dump them. That creates a massive decline in the dollar. The printing of money, the global debt, all of that stuff comes back to roost at that point. And I do think you get a scenario where the people of the US and really globally will demand a new currency. Now, it may be called the dollar 2.0, who knows what it is, but I think it will have restrictions. So there'll be some sort of restrictions and the people will demand this where you cannot print endlessly amount. There'll be a stated run or there'll be a slow expansion that's pre-stated. So everyone knows how many dollars there can totally be, or dollar 2.0. And I also think the Federal Reserve won't be in charge in their current form. So people will, there'll be a scapegoat essentially, and the politicians aren't going to take the blame. We know that. They'll push it on the Federal Reserve. And so eventually you'll have this scenario where I do think good comes from this, but it's going to be a long, hard road. Yeah, so I do think that eventually the Fed is going to introduce like a digital dollar, right? And then they're going to move towards that. But I still think that collapses because it's unsustainable, right? You just can't have something where you just print more and more. And then as you might give more people money, but then that just creates more inflation in the system and so forth. So, and then the dollar is worth less and less. And again, eventually you get to Venezuela type situation where the dollar is worth almost nothing, or maybe not even what's printed on at that point. So at that point, I do think you get some sort of massive kind of reset. And it probably involves a Great Depression type thing. I mean, we know the 100-year cycles coming up at the end of this decade from the 1929 crash of the stock market and the Great Depression of the 30s. And I am fearful that that might coincide. We saw the 100-year cycle with the Spanish flu and COVID too. So just keep that in mind. I am in that camp. So we do have 4-year cycles. I mean, a lot of people were talking about how the cycles were getting elongated, but honestly, that hasn't been the case. It's been dead on to 4 years, basically. 2009, it was created. 2013 was the next top, 2017, 2021. So all we can do is look at history, and the history shows us that the bear market will last. So from peak to trough is usually about 12 months. We're already 6+ months in, so that's a good thing. And then usually the recovery comes in the next 6 months after, where it'll start to chop sideways and then begin to grind up. So I think, as far as the charts are telling me, it's basically we are in a bear market. Probably price still has downside to go, but look at it like you're going to get the best buying opportunity of your life. So my general price target has us going to between 20 and 12,000. So I'll just start right around 20. Yeah, sorry.
Woo!
Sorry. But again, it's a short-term low. And you have to keep in mind is so crypto's never been through a period where the Fed has been hiking rates like this, where they've been sucking money out of the system. So this is a new uncharted territory for Bitcoin. And in previous bear cycles, Bitcoin's dropped like 80 to 85%, which actually, that gives me my low end target of 12,000. That's right around 85% correction from the 69,000 high. Now, I think that because adoption is continuing and more big money is getting in, I'm hopeful that it doesn't get that low. But as a trader, one of the things I've learned is never underestimate the markets, whether it's stocks or crypto or anything. It will surprise you. All we can do is kind of be smart enough to leave enough dry powder where we can accumulate at lower moves if it does happen. And so that's one of the biggest changes in my trading is when I was a young trader, I would be like, oh, this is the buy price. I'm going to buy it all here, put all my money in, and then it would go down further. And I'd be like, oh crap. And I can't do anything about it. Now I'm much more of let me put a little bit of money here. And then if it drops here, I'll add a little bit more. If it drops here, and you kind of dollar cost average. And dollar cost averaging is the best thing in the world. I think that's the one thing I learned as being a trader is that because the market can do anything it wants at any time, you have to be in a defensive mode as an investor or a trader, because that's the way you will be able to react when something does happen that's unexpected, which is inevitable. Some things work out perfectly, like you draw them up on the board, and then other things don't. And if you can't react in those situations, you lose a ton of money. And I'm at a point in this career, I'm not ready to lose a ton of money.